Hi, I'm Michael Yardney here with my next property market update. And today I'd like to ask you the question, do affordable properties really make good investments? You see, rising property values and higher interest rates are making properties less affordable. And house prices undeniably have come off the boil over the last few months. Now, this has caused some alarmists to sound warning bells. They're saying, the old story that our property market's about to collapse. And other commentators are suggesting that property investors should consider buying affordable properties. So I guess back to my original question, do affordable properties make good investments? Now sure, more people can buy them, but just because a property is affordable doesn't mean it's a good investment for the future. Now before I explain why, I'd like to just quickly mention to you that I've brought out a new DVD program called Building Wealth Through Property Investment, and at the bottom of this video there's a link where you can find out all about this. This is a great program to show you my strategies for the new property era because the market is changing. You can also buy it together in a bundle with another great program about the mindset of successful property investors. Anyway, back to the topic at hand, because recently one commentator suggested there was a big move to Melbourne's more affordable western suburbs. And in fact I've now seen a number of property marketers push these regions, in particular to inexperienced investors. Now, even if you weren't considering Melbourne's western suburbs, there are some interesting lessons to learn from this session, so please listen on. You see, looking back not that long ago, the term sea change became popular in property circles, and was used to describe urban families packing their belongings and making a pilgrimage to various parts of our extensive coastline. One of the most popular destinations for sea changes was Queensland's Gold Coast. For decades that claimed the title of the fastest growing region. Until recently, that is. In a recent study, demographer Bernard Salt explained that the Gold Coast has now been bumped to the number 2 spot as Australia's fastest growing region. Because recently Wyndham and Melton in Melbourne's outer suburbs attracted more people than the Gold Coast did over the last year or so. Now, Salt makes the point that although Melbourne's western suburbs lack the Gold Coast's glamorous high-rise, the skyline, the canals, the bikini-clad meter maids, with instead that area being more famous for its nearby sewage farm than anything else, but it boasts one big draw card, and that's affordability. Salt says that although Melbournians have traditionally favoured the more undulating eastern suburbs, as opposed to the flat basalt plains on the city's west, they're now starting to appreciate its proximity and its affordability, especially in areas like the revamped Werribee and a bit in Melton. So back to my original question, is this the right place to buy a property investment? And my answer is very clear, definitely not. Just like the sea change locations and other hotspots were never the right place to buy investment properties in the past, neither are these areas the property investment areas for the present. Now, sure, sea change properties were all the rage not that long ago, but very few people enjoyed the same level of capital growth when buying on the Gold Coast, the Sunshine Coast or Mandurah that other investors were able to achieve when buying well-located inner suburban properties in our capital cities. Undeniably, affordability will become a critical factor in many homeowners' buying decisions. So while these new suburbs may be a great place to live, that's not where you find what I call investment-grade properties. Remember, investors should be looking for asset growth, and we know that in general, it's the land component of properties that appreciates. This means for an investor who's looking for capital growth, they want a high land-to-asset ratio. Now, just think about it. When you buy a new house on a block of land in one of those new outer suburbs, you may find the land, the bit that appreciates, is often worth significantly less than half of the total property value. Now, there are lots of other reasons why I suggest investors should avoid buying houses in these new estates. And they all relate to the probability of poor capital growth. Firstly, new homeowners in these mortgage belt suburbs are much more sensitive to interest rate rises because they tend to have less disposable income than people who live in the more affluent suburbs. Secondly, there's really a scarcity factor about properties in these locations. Most properties look the same, with more similar houses just across the road in the next estate there. Of course, scarcity is one of the major reasons properties increase in value. Another reason I'd steer clear of these areas is the demographics. While they're great for young families, there just isn't the same demand from a diversity of tenants as there are in the inner suburbs and the middle ring suburbs. And it should be fairly obvious by now that physical growth of a suburb, that is more people moving in and getting bigger, doesn't relate to capital growth. And that's what you want as an investor, where values increase, because that's affected by supply and demand. For my money, you can find better investment properties elsewhere. So where are these investment grade properties? Those that are going to give you good value in the next year or two. Well, our property markets are obviously adjusting to rising interest rates, and I guess a bit of market nervousness. And yes, some properties have dropped in price. And this has occurred particularly at the upper end of the market, those high-end properties. But these were never investment grade properties anyway, and the same is going to happen in many holiday locations over the summer months. Prices will fall because fewer buyers are going to bid for properties on the market. And as I've just explained, properties values are likely to fall a bit at the lower end in the new housing estates and in regional Australia, because all these areas are going to be more sensitive to interest rate rises. But I see medium density, middle price properties, especially apartments, and particularly in the inner and middle ring suburbs of our big metropolises of Melbourne, Sydney and Brisbane, I see those sort of properties holding their value pretty well. People living in these areas, they're not as interest rate sensitive. Now, you know how they say statistics lie? Well, currently the reported median price changes, they're not a good measure of what's really happening in the market. Let me explain. While the general property market has been pretty flat, there are still some really strong suburbs that have got good capital growth, while at the same time there's many suburbs where their median prices are falling a bit. It's like me putting one hand in a bucket of ice water and the other one in a bucket of boiling water and saying, on average the temperature's fine. Some parts of our capital city markets are hot and others are not. See, we're moving into the next phase of the property cycle, one of increased risk for many investors, because they won't be carried by the property markets. Yet, it's a time of great opportunity for those who know how to play the game. If you want to grow your own significant property portfolio, you need to own properties that are going to give you wealth-producing rates of return. This means buying properties below their intrinsic value in areas that generally outperform over the long term, and ones to which you can add value. This could be through renovations, refurbishments, redevelopment. Some viewers are definitely going to need to do different things to protect their current property portfolio in this new era. Now, I've outlined the approach I'm taking in this new 2-DVD program, Building Wealth Through Property Investment, where I explain my views on what's ahead in the economic cycle, plus the strategies that'll work well over the next few years. For close to 4 hours, I'm going to explain my successful property investment approach. If you want to be prepared for the market as it's changing, please click on the link below and get full details of this DVD, plus 3 free bonus reports and audios that come with it. Now, if you've missed my recent round of seminars, you really must get this program, so click down below and see. Now, of course, I'm going to keep you updated with how to take advantage of the changes happening in our property markets in my fortnightly updates like this. But it's also probably appropriate to remind you that in changing times like we're experiencing, nobody can quite help you like the independent property investment strategists at Metropole. Now, remember, our multi-award winning team have no properties for sale, so their advice is independent and unbiased. If you want to find out a bit more about what's happening in your local market, or what our research suggests in store, join us for a free briefing in Melbourne, Sydney and Brisbane, or with our associates in Perth. Just click on the link below and join us. And of course, with there's so much happening in our property markets nowadays, I'm going to keep you updated almost every day with a short post in my blog. Just click Michael's blog at the top of the menu and subscribe to it. Now, that's a very different subscription to my regular newsletter. It gives you a short daily update. Look forward to bringing you your next update in 2 weeks' time. Have a great week. Make it a great week. This is Michael Yard.